Well, good morning, everyone. Hope your Sunday is going well so far. Not a crazy amount of movements over the last 24 hours. Not really that surprising. Again, it's the weekend. Volume has come down quite a bit, and now we've actually done a complete flip in terms of ADA. The trend we were talking about yesterday is now showing the exact opposite. Could this, in fact, insist that we're going to have a pump running into the end of the weekend? Just want to talk about a few things going on here that I think are worth noting. So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So we did see some red yesterday. We did fall back into trend. Not really that surprising because, again, if you guys remember, we were talking about this head and shoulders that was building up at the top of this trend right above structure. And of course, as we got into our day, right about 7 a.m. or so, when U.S. markets were well, I guess U.S. markets weren't opening, but when U.S. money typically wakes up, we got this little dump back into structure here. Not surprising, not anything that's really concerning either. What I will say here is now we've actually flipped this and we're starting to build an inverse head and shoulders. And in fact, we are currently, wow, if I could draw, we are currently, I should just use the straight line tool, breaking this neckline. Could this in fact mean we're about to actually retest the top of this structure, which is about 50, we'll call it 57 cents or so? Could this in fact be where we push out of this and maybe get one of those Sunday rallies? Possibly. Not saying that's going to happen for sure. Just be aware that that is happening on the shorter term trends, right? Now, most trends are currently sticking very close to those breakout points. We're kind of floating right around the top of this. Not necessarily the greatest spot to be, because if you're not getting a push through this, you tend to get rejections back down. If we take a look back here in the first week in November, we were doing the same thing. We're kind of sticking around the top of the trend. And of course, Monday we had, big leverage liquidations, but we've done these sorts of things before. So we'll see obviously what Sunday brings us. I will say BTC not really doing a whole lot on the day, still just trending sideways. We are actually building a little bit of a bear pennant, so that's something that we're going to need to watch very closely here as we get into the early part of the week, just so you guys can see what that's looking like. We are hanging around the top of this, but Ethereum actually starting to bounce back up. So ETH is actually building an ascending wedge, which is actually a bearish formation as well. So we got to watch that potential breakdown and retest down around 3150 to 3200. Now that's getting rid of there. Now that we've covered a couple of the quote unquote possible bearish things, let's talk about this. The government shutdown is obviously still in effect. Like we talked about, they voted, didn't pass. Now, that being said, it sounds like there may in fact be another vote that takes place today. So this speculation that the government shutdown could be ending very soon is still a possibility, but that's where I'm going to leave it at. It's a possibility. It sounds like right now we have pretty serious deadlock on both sides. Betting odds are currently showing that November 20th could be the conclusion of this, but we'll have to wait and see what happens. Now, that being said, apparently some people didn't like my beaver moon discussion yesterday. And guys, you have to understand, I'm not saying this is a thing. I'm not saying it's the end all be all. I'm just simply pointing to the fact that there are some correlations between these things. All right. And whether it's right, wrong, or otherwise, it's just interesting nonetheless. And I love sharing interesting information. But let's talk about something that will have a more direct correlation. This is actually from Omega, a candle proof of insight. He made a great post actually tagging me in this on Twitter. He said, everyone watches the Fed balance sheet, but the smarter metric is the WRESBAL, which what is that? It's the reserve balance with the federal banks. And when that rises, liquidity flows and BTC rallies. When this falls, credit tightens and BTC stalls. The chart shows we have stabilized, but we haven't started the real liquidity expansion yet. The next projected increase begins around December 2025. If that holds, the true BTC macro top seems to align with 2026. The market doesn't just move on narratives, it moves on liquidity. And that was a great description. And again, we've been waiting for a lot of the liquidity pushes to catch up. We know the Fed is very quietly doing QE. And again, the big confirmation of this is going to come when they completely pause QT. We obviously know what's taking place there. Now, that being said, there is a big capital rotation that's currently taking place. Bitfinex whales nailed the last two major Bitcoin moves, according to Crypto Rover. They're fully long again. They did this actually in 2024, late 2024. They did this again in early 2025. Basically, as we saw our April bottoms. And what we're seeing is the exact same thing playing out again. Could they be right yet again? Possibly. Something I did want to actually point towards is retail leverage trading is kind of grinding to a halt. Remember, we've been talking about this for quite some time. Average leverage position size has been dropping and dropping and dropping for several months now, and now it's actually down to $1,930, which is the lowest that we can actually see on this chart. So retail exhaustion when it comes to leverage is finally starting to take place, and that's what we wanted to see, right? Because retail was a big reason why we were getting some of these major liquidation events, because retail doesn't know what the hell they're doing when it comes to leverage, and that they've contributed to a lot of the major drops that we've seen. We basically had the big leverage euphoria, and that's led us to multiple major black swan events here in 2025. So this is a good thing now that retail has actually shifted and started buying spot again, which is a reason why we've obviously seen great defensive price. It's why we've seen some of the good rallies that we've been on here. Obviously, ADA right now about 56 cents rather than being down around 50. It's not the end all be all. It's not a great, exciting, euphoric moment, but it is an important shift nonetheless. Did want to point also to the fact that this has been another big week in terms of exchange supply removal for ADA. We've actually seen $47.65 million worth of ADA removed from exchanges, which marks the largest week since the basically third week, late second week of October. So it's basically double the size of what we saw at the end of October. So that's all looking really good. So yeah, we're in a good spot. Just understand that there is the potential for downside. There is the potential for retest. At the same time, we could very much see the Sunday manipulation where they want people to chase. They push prices to the upside. You could see this the opposite way too. Understand that. We could get a Sunday fake out to the downside where it looks like we're going to drop down. And then basically we flip to Monday's candle and we're breaking out of here, right? So that's where we're at. It's only about $120 billion in trading volume today. It's very low volume. It's very easy to manipulate the markets, but we'll see where the day brings us. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. Catch you guys in the next one. Take care.